We're back on the block. Let's continue from where we finished up before the break. Pt.1 Capital Management yesterday initiated a coverage on Forte Oil, issued a 50-page report that provide the background to this coverage initiation on the integrated energy trader. The energy firm with 1.033 billion shares in issue was rated a buy. But let's just hold on a second on that. Let's go to the big seven. And we thank some of our viewers who believe that we should expand this seven to include one or two other oil marketing companies listed on the exchange. We're going to do that. Thanks for sending those email to us, and that we should expand this. But we think about the big seven now. Let's expand that a little bit in the days ahead. We appreciate that. But this is where this is how they finished off on Thursday. Corn oil 27.55, Forte oil 49 naira 10 kobo, and Pt.1 a PLC off track 4.87%. MRS lost 4.97%, almost the same margin, almost 5% between Pt.1 and MRS. Then Owando was a green shoot, 0.68 at 594. Seplat sitting on change at 450 per share, and Total also a green shoot, 0.63%. But those two gains by Total and Owando was not strong enough to upset those almost 10% decline in Pt.1 PLC and MRS. That was where the market finished off as far as the big seven. Then let's move on, of course, back to the story around Forte Oil, where Pt.1 Capital has initiated a coverage of this integrated energy trader. The rating was a buy, quote unquote, and a price target or target price, to use market terminology correctly, of 92 naira 1 kobo. What target price means that this will be the highest price level for Forte Oil, according to Pt.1 Capital, by the end of December. This is what the target is, as far as the analysts and researchers or whatever in Pt.1 is concerned. So that's their target price. Currently, you can see Forte Oil trading around 49 naira per share, and they believe there's an upside of about 91% to that market price on the day of the report, which was yesterday. Just take that in there. And then the report went on to say that the valuation for this particular company, Forte Oil, was based on what you call discounted cash flow modeling. If you're in the market, you know what the DCF is all about. Or based on the positive earnings forecast of Forte Oil that the company has provided, and the analysts also worked on and arrived at that valuation. One, for a rating. Two, on the target price, 92.01 kobo for the year 2017, when the market should be over. Now, what was the background here? The report says the positive rating on Forte Oil was based on the integrated energy firm modeling that is currently approach to energy business, strong footprint in the power sector by Forte Oil, and the improving corporate governance structure and practices in Forte Oil. Those were three main bases for the current rating of Forte Oil by Pt.1 Capital. You can see the key numbers. Forte Oil currently has a market cap of 62.65 billion naira, has an enterprise, a net debt of 28 billion, 28.37, has an enterprise value of 91.02 billion naira. Total shares outstanding in Forte Oil, 1.303 billion, and the share price year to date has been a negative 43% against the market upside of nearly 32%. So Forte Oil has underperformed the market this year by about close to 10% or less than that. But of course, let's see how that plays out. But that's just the news there from Pt.1 Capital Management initiating coverage of Forte Oil PLC. But let's move on to one big news. Of course, yes, it's big because regularly the central bank and bank CEOs do meet, and it's called the Bankers Committee. And at the end of this closed-door meeting, there's always a media briefing in which some bank executives are usually selected. That's a practice to brief the press about some of what they've discussed. Definitely they don't tell us everything they discuss behind closed doors. But yesterday, they told the media a few things about the new exporters, intervention fund set up for exporters, and a few snippets about the state of the economy. Let's take a listen to some of the bank CEOs and one of the directors at the central bank in charge of banking supervision who spoke to the media on some of these few issues. Let's take a listen now.
So the Bankers Committee met, and as usual, they discussed issues pertaining the economy as well as the industry. The committee was happy to note the emergence of the country out of recession, which is an important milestone. We recognize that the growth is still fragile. It's just 0.5%, but it's a heavy development compared to the negative 2.5% that we witnessed in the middle of 2016. But importantly, we recognize that there is need for more work, hard work to be done in order to make the growth more robust and deeper and more pervasive. A number of programs have been discussed, which I'm sure my colleagues will talk about, that will help in deepening growth and development of the economy. But we also are happy, of course, to recognize stability in the forex market, which we are going to talk about. We're happy to note vibrancy in the capital market as a result of the economic growth. We are also happy to note the moderation in inflation. So all these are signs that with more hard work, the growth, GDP growth is going to be deeper and more robust.